today's real estate market can be tricky. Want to buy or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. live on Real Radio.
Yeah, good Saturday morning to you. Welcome to another edition. It's Florida Talk Real Estate, and we are live on this Saturday, November 16. Kicks in the beauty. Great to have you with us. Whether you're on the old radio there, 92.1, 101.7, I salute you. Maybe you're on your free download your iHeartRadio app. That means we are worldwide. You might be in Ireland, possibly listening. And we do salute you if that's the case. And of course, we welcome you to join our live stream every Saturday. You can do that. I see the camera set up. It's happening on Facebook and YouTube. That's Florida Talk Real Estate on Facebook. On YouTube, Florida Talk Real Estate LLC, home of a ton of informational chunk videos, plus a live stream of 2 hours of infotainment on a Saturday. Great to have you with us. You're more than welcome to be a part of this program. Toll free at 877-927-6969. With your questions, comments, concerns in the world of real estate, the first voice you'll hear, the melodious tones of our producer extraordinaire, Jimothy, my brother from another mother. How you be?
Hello, and good morning, gentlemen. Happy to be here with you.
Nice to see you as always, my friend.
Yes.
Pleasure. I'm your boy, Johnny C., your old pal. Your air traffic control on a Saturday. Let's go ahead and get an introduction of your very important people. Your starting lineup of our power team on a Saturday. It's always nice to say good morning to Ross Komarinetz. He's with Brightway Insurance in Juno Beach. Ross, it feels like it's been an eternity. How are you?
It does feel like it's been a while. It hasn't been, I don't think, but doing good.
It's nice to see you.
Good. Good to see everybody. Happy Saturday.
Looks like you got plans for a kick-ass weekend because I see you riding the parking lot. I'm like, Ross has got some adventures.
Oh, no, that was from yesterday.
Oh, the yesterday adventures? Past adventures.
Yeah, past adventures.
All right. I hope they were fun.
It was fun. Yeah.
I bet they were.
There'll be some more later. Different adventures.
All right.
Yeah, we call that chapter, the next chapter.
Send video.
I don't know if you're ready for that, Jimothy. Always good to see you, Ross.
You too, sir.
And it's always nice to say good morning to Mike Rauch. He's the mortgage guy from the mortgage firm.
That's right.
And again, it feels like it's been a long time. Every time I'm out for just even like a week, I'm like, I miss you guys.
Yeah, we missed 1 week.
It feels like.
Well,
yeah.
Who's that?
Hey.
Whoa.
You haven't been introduced
Whoa.
yet.
Good morning, everybody.
Good morning.
Timothy, looking, your room is it's lighter than normal.
Yeah, the shades are open.
Normally,
And I see now those were open earlier on your side, but I see they closed them back up. But yeah, all the shades are open.
Look at Timothy.
So how about
He's normally got that Charlie's Angels vibe going on.
yeah. The shadow. Lurking in the shadow over here.
It is nice and bright.
Mm-hmm.
Yeah. It always felt so like, I don't know, almost dirty over there.
Wow.
Put your pants back on.
It's probably the people.
I mean, he is in radio.
Yeah, true story. Nice to see you, Mike. And let's say good morning to our fearless leader. I've told you for 12 plus years now that he runs a top producing Keller Williams team. Keller Williams Innovations. You find the Florida Home Pros team. It feels like it's been a long time since I say good morning, Jimmy D. Jim DePola, how you be?
I know it feels like weeks, or like we're off for weeks for some reason. It's
right?
Weird, just very weird. I don't know why. I had to set up all the equipment today. I didn't remember how.
What am I doing?
Like the 4 cameras, I didn't know how to do it. Thank you, Jimmy, for helping me.
No problem. Happy to do it.
Got a lot to talk about today. To me, the big news right now is in the real estate market is interest rates.
Again?
It's not doing anything that people were expecting it to do. So we're going to talk a little bit, not just hoping, planning. People were like planning on it, right? They were betting on it. Not happening. So we're going to be talking a little bit about that. I love my critters. So I read an article about where are all the Florida alligators. So we're going to get into that a little bit. The Consumer Price Index and the Price Consumer Index came out. The PCI and PCI came out. And they have that chart of all the different groceries and how much they cost today compared to a year ago. So we're going to do the quiz. I love that grocery quiz because they can say, how much does this cost? How much does that cost? And see if it's what you guys think. We're going to talk again. It's so weird. The economists are talking about 3 words that we don't like in real estate or in the regular economy: inflation, deflation. Well, actually 4. They're talking about inflation, deflation, although the deflation is not the biggest subject, reinflation, which we talked about a couple weeks ago, and then the dreaded stagflation.
Oh, come on.
No,
Nobody's
not the
saying recession yet?
No, not
Nobody's
the
saying that?
recession.
Not yet.
Stagflation is a recession.
Yeah.
Right, for sure.
I'm surprised recession isn't popping up.
So the deflations, we're going to talk about different phases of deflations today and figure out what the heck is going on with that. We're also going to talk about where everybody's moving to in Florida. You know, Florida is one of the supposedly fastest growing states in the United States.
Oh, yeah.
We're usually number 1 or between the top 3, New York, California, Texas. I didn't say that right. Florida, Texas, California, usually the big states that people are moving to.
And that's the top 3 by population, just in the opposite order. So that's fascinating.
Yeah, right. Right. And that's why they keep growing, right? That's why they're the big guys. So we're going to talk a little bit about that. But what I got was, which I thought was interesting, is where people are moving to Florida. So county by county breakdown. So I wanted to see how we fit in Southeast Florida compared to the rest of the state. I found that to be interesting. So we're going to take a look at all that later today. But first, I want to do just a couple of shout outs. Wanted to do a shout out to Richard. Thank you so much for trusting me to sell your property. We sold his property in Lake Park. We closed on it last week. It took us almost probably like 3 weeks, 4 weeks extra to close, because what we found out is Richard, like 2 years ago, had pulled an electrical permit for the house. So he did the right thing and he pulled permit to do work on the house. Hired licensed insured electrician group to come out. They did the work. Here we are almost 2 years later. We do the title work. Thank you, Trident Title. He did the title work for this and found out that there was an expired permit. And then Richard,
they never closed out the job.
They never closed out the permit. So the work was done more than a year and a half ago. I didn't know the work was done until we found out during the title work, which is usually towards the middle end of the deal. And while we're waiting to close, it's one of the things. So Richard started calling up the electrical company, the electrician, and he wasn't really responding. He kept giving excuses. Oh, my permit person is out of state right now. They're on vacation, this, that, the other. Finally, I just said, Richard, do you want me to just step in and take it over? And I called up that guy and I read him the riot act. And I was like, look, I need you to take care of this. This is a 14-month-old permit. You didn't even do the rough inspection, because they have to do a rough and then a final. They didn't do any inspections on the work. This is unacceptable. You know, he kept giving me excuses for like 3 weeks. We were working on this 3 weeks. So then finally I went to the city and I asked them what was going on. And they didn't really know about this case, which really bothered me, because you figure squeaky wheel gets the grease, right? So I started looking at the paperwork and saw that the electrician that did the work was not the electrician that filed the permit. And the reason why that happens in real life is because sometimes electricians or tradesmen will work under somebody else's license, right? And you're not really supposed to do that unless you're a GC, right? If you're an electrician, you're not supposed to give another electrician company permission to use your license to work under your license. But people do it all the time. But as a consumer, you really got to find out if your person's doing that or not, because you're open up to a lot more liability if you do it that way and you have a problem. So I ended up calling the main electrical company, right, that pulled the permit. And I said, hey, the guy that you are letting you use your license didn't do anything correctly. We've been trying to fix this for a month. You got to jump on it right away. Get this thing taken care of. Got to tell you, that guy was stand up, he and his wife. They jumped on it right away. It took them like 7-8 days to get it corrected. And they did everything totally above board and everything.
Did they have to have an inspection?
Yes, they had to come out.
Yeah.
And then the paperwork wasn't filled out, because now the city, when you have an expired permit, a lot of times the cities become very particular of everything that has to be done. And they kind of drag you through the gauntlet for for allowing that to happen, because now your lack of follow-up as the tradesman creates more manpower and headaches and time cost for the city. And they didn't do anything wrong. You pulled the permit. You didn't ask for the inspections on time. So I work with the city a little bit, but the electrician came in and we got the thing closed, and it closed a little late. We actually had to do this. We had to pull the seller in order to close, so they didn't lose the buyer. Had to take some of the money that they were closing with at escrow and keep it in an escrow account after closing to have enough money to take care of the electrical if the permit wasn't taken care of. And then when the permit was finalized, the buyer would release the rest of the money to the seller. It only took us one day after closing. We closed on a Friday and we got the paperwork on the Monday. So there was hardly any time. The owner got the money back right away. So Richard, thank you so much for trusting us to do that job.
Yes, thank you.
And really appreciate it. I wish Richard didn't sell that house because he bought it as a rental property for a relative and then they didn't need it anymore. So we decided to let it go, and I understand why. But that neighborhood is 8 blocks away from this major marina development that's going on in Lake Park right now. He's 8 blocks from the Intercoastal, this house. And while that neighborhood is a little, it has good pockets and not so great pockets as far as crime and the type of activity that happens at night, that neighborhood is probably going to increase probably by 50% in value over the next 5 to 7 years once that marina's done. And
just because of that feature,
just because of where it is, right? There's going to be a lot of that place is going to get gentrified. And I started walking the neighborhood just for the heck of it, and there's a lot of really cool older Florida homes in there.
Yeah,
it's kind of cool. And there's some people that take care of the house so nice, and it's so nicely landscaped, and you just get these good feelings. And then a couple of doors down, you got the blue tarp on the roof and the jalopies in the yard and the grass not cut. So it is a little spotty, but all that's going to change once that marina is fully done. So there's really good opportunities in that pocket. So anybody looking for investment type of stuff in that area, you got to let me know.
Do people still use that word, jalopy?
Jalopy? You're calling me old? Yeah, you call me old.
Does that predate Hoopty?
That's funny. I used the word, I was talking to one of my customers, I used the word ameliorate a couple of days ago. And then I was like, I was thinking in my head, even as the word came up, I was like, why would I choose that word? And then the person on the other line is like, good vocabulary. And I thought that was kind of funny.
I think I have a vague idea of what that means.
Just wanted to
almost feels forced.
Just wanted
just hearing it, you know, you're like, what?
Ameliorate. Yeah.
Wanted to give a couple shout outs. Thank you, Magali, for stopping by again. She's been becoming a real top fan of our show. Really great. Thank you so much. I know that her sister's trying to buy eventually. Magali's trying to get sister to watch the show. Thank you for letting us know our volume's okay. So it looks like our volume's doing okay today. So that's great. Joyce, welcome back. I'm glad you came out to say hello. Your son is doing fine. Where's my mom? I don't see my mom here. So she'll be on, I guess, eventually. And Jackie, thank you so much for letting us know that our volume is doing okay. Thank you so much on that. Hey, everybody, don't forget to check out our YouTube channel when you're off air. Go into the shorts section because the page isn't really completely fixed yet. I'm trying to deal with the content, then I'll deal with the prettiness of the layout. But the short section is doing pretty good. We take a little bits of the show that we're doing right now and chunking them into really good informative videos. We have a 3-part series on there, and these chunk videos are like 45 seconds long, a minute long. So 3 minutes, you get a lot of information. And we just did a 3-part series from Mike's last show about 3 of the best down payment programs out there for buyers.
Awesome.
Really good information. So go out there and check it out. And we have really good information from Ross about insurance and what's going on with insurance and insurance tips. Check out our YouTube page. It's called Florida Talk Real Estate, LLC.
That's right. And then on Facebook as well, that's Florida Talk Real Estate. And always remember, Florida Talk Real Estate is .com, your one-stop real estate shop. These are pros, all put together in one place. It's perfectly named the one-stop real estate shop for that very reason. And if you have any need, buying a home, selling a home, stuck with a home, you don't know what to do, anything that touches real estate, remember the team, floridatalkrealestate.com. Know it, use it, love it, share it.
Thank you. Just a couple more shout outs. I wanted to do a shout out to Lorraine. Lorraine met with me probably over 2.5 months ago. She needs to sell a property. It's in the acreage. It's not too far from where Mike lives, a little farther west, Mike, than where you are, but in that same general area. And it's a 2-bedroom, 2-bath CBS home. Needs a little bit of work, but it's got a 2019 roof and a good AC, and the water heater's good. Everything's livable in the house. It isn't like you have to do a lot, but it probably needs some updating over time. But what I love there's so many things to love about the property than just the house on this one. It's a 1.37 acres, so it's a little oversized for that area. This house has entrances it's on Murcott Boulevard is the name of the street, but it also has an entrance to the property on the street to the south of it, which is really nice because it has a 2,000 square foot detached building that's insulated and has electric. It used to be a metal fabrication workshop. And that workshop is probably worth somewhere between $80,000 and $100,000 if you were to build it new. It's got a 200 square foot carport that could fit one of those big, 35 foot, 40 foot RVs, covered area for the RV, and plenty of room to expand the house if you want to, or put another house on the property or a pool. You could do so many things with this property. The other thing I love about this property, it's so landscaped. You cannot see your neighbors from any side. It's fully fenced, but the landscaping, you cannot see anybody. You feel like you're in your own like little slice of tropical paradise there with a lot of really great
even better
Florida.
than that, they can't see you.
They can't see you. You don't see right. You can't you're there. In fact, I was trying to show it to one of the neighbors. The father liked it for the son, so we were showing it to the neighbors off market just to give them a taste of it. Then the father liked it enough where they brought the wife out, his wife, and the wife's looking at it. And I talked about how secluded it was and like nobody ever know you're here. And it got her creeped out and she didn't like it.
Yeah.
And, so she didn't want her son to buy it.
Put that in the don't say
category. Yeah. So I was like, wow, most people would like that, but this person chose not to like it. So you got to
get killed here. Nobody even know.
Sounds like a Rob Zombie movie. No way.
So thank you, Lorraine, for trusting me on helping you with the property. We're going to be putting it on the market. It looks like sometime next week. So and just so we're going to get into this a little later, when we talked about what we were going to list for the property for 2.5 months ago, is quite a significantly higher number than what we're actually putting the house on the market today, because the market's changed that much.
How many months?
2.5 months. So it's just another reason to understand why it's better to be a good time, not better, but a good time to be a buyer. Now it is a good time to be a buyer. I know a lot of people don't feel like it's a good time to be a buyer, but compared to what we're going to be looking at in the future, this might be as good as it gets for a while.
Well, as more and more inventory gets added, I feel like it just gets better and better, right? As a buyer.
And we're going to talk about that because one of the articles I saved was a state-by-state breakdown of where inventory is growing and shrinking across the United States. And I thought that would be interesting. We're going to talk about that a little bit.
Very good.
One last shout out to Joanna and her son, John. They just hired me yesterday to list their house in Aberdeen Country Club in Boynton Beach. It is a membership equity community, which means besides paying for the house, or in this case, a townhome or villa, I should say, if you buy this 2-bedroom, 2-bath with a den villa, you also have to pay a membership equity fee of anywhere from $15,000 to $50,000 a year. To be part of either a social membership, a golf membership, a tennis membership, some type of social membership. And then you have to pay a fee to the community for moving in. And I sold one of the units over right on the same street I'm selling now. And I sold it in March for a guy named John who moved to Asheville, North Carolina. He was getting older and he needed to move closer to his family. And that sale is still holding up. For 18 months, not just since John sold it in March, but total of 18 months. I'm the high sale in that neighborhood still.
Nice.
And that was in March, right? So that was in March. So 9 months later or 8 months later, it's still the highest sale. So that just tells you a lot about what's happened in the economy for real estate market.
Is it slow, the neighborhood in general, because of the membership equity? So like how many sales since you sold that
It's
compared to
it
another
is
neighborhood?
it is slow, but it's always kind of slow there, even in a good market because of that. But they're not. It isn't dead. I wouldn't call it dead. It's just slow because of that.
Yeah.
That neighborhood still, Aberdeen is still a hugely popular neighborhood. It's really run well. They have 6 restaurants over there. You don't even have to leave the community really to do what you want to do. If you wanted just a Uber or whatever, your groceries in, you don't even have to leave the community if you don't want to.
It feels like there's very specific buyers for that.
Yeah, they want that lifestyle.
Yes.
That's what they're looking for.
That's it.
And this unit is going on the market. John's unit, when I sold his was the 2-2 with the den on the lake. It didn't have as nice lake view as the one I'm selling right now. But that one I sold and closed at $365. We put it on the market for $375 and took $365. It took us like 65 days total to do it. This house we're putting on the market at $275 because that's the way the market's changed. And this unit has a better view of the lake. I feel like the unit is in better condition overall.
But it's $100K less?
That's because of what's closed in the neighborhood. And this is the kind of neighborhood we're putting it on the market at the beginning of the season, because this is definitely a seasonal neighborhood because it's 55 and over. So what happens is people are moving down here right now to use their units for the season or vacation down here with their friends for the season. Then they'll start looking at properties all during the season, but they usually don't plunk down anything that they want to buy. They don't put a contract in until the end of the season as they're leaving, right? That's the way a lot of people do it, unless they find a unit that they just love so much they're afraid that somebody else is going to take it. So I told them, let's go ahead and put it on the market now and try to take advantage of the whole season in case we get lucky and somebody wants to buy it like super fast. But we have a backup plan of what will happen if it isn't sold by January 1st, and then we'll take it from there.
Awesome.
But thank you so much for trusting us to do that. That was actually a referral because the agent is the Keller Williams agent on the west coast of Florida, knows the relatives that are selling here. She didn't know an agent. She was doing background checks on Keller Williams agents in the area. She came across us. She felt like we were legit. She reached out to us. I called her back in 15 minutes. She said she didn't call me back to the next day. When she called me back, she goes, I called 5 people, and you're the only one that called me back, right? So she called 5 other agents, right?
Interesting.
I'm the only one that called back, and so she goes, I read your background.
That's why you're the best,
recommend. Yeah, I guess so, right? Because I can make a phone call, right? I can dial 7 digits.
Wow.
But thank you so much. Her name is Colette. Thank you so much, Colette, for referring me out. I promise I'll do a great job for your family. We had a couple of other things. It's been on my mind a little bit. There's a guy on our show who's been with us for 10 to 12 years. We've helped him with a lot of real estate stuff over the years. Ross has helped him. Mike's helped him. I've helped him. Rick. And just found out that he had some pretty bad diagnosis with health. And now he needs to get things straightened up in case things don't go the way he's hoping. And, it was nice to know that he picked up the phone and called us, for the real estate stuff that he has to worry about for making sure the future is okay for him and his family. And, it's sad to hear that he's not doing well, and I hope that he's going to have a fast recovery. I've had my health issues I've been able to pull out of them, so hopefully he will too.
Yeah, seriously.
But it's just nice to know that when people need help, they think of us. They think of this whole team, right? They think of Florida Talk Real Estate. Hey, let's call those guys. And the reason why they're doing that is because they trust us. And we have to hold that standard every single day for people. But they trust us because they know we're not out there just to make money or just like we're all about just ourselves and all that.
That's right.
We're here to answer questions and get the answers that people need. So if you ever have anything related to anything real estate, refis, mortgages, insurance questions, of course, buying or selling real estate, legal questions with your house, title questions, don't do ladybird deeds without talking to somebody, right? Like just, I'll write the will on a piece of napkin and everything will be okay.
Mm-hmm.
We're here to answer all those questions, and it's free. It's free. And the other thing that's great about calling us, when you call up a regular mortgage person to find out if you can get a refi or something, right? Or how to get a loan or the process of getting a loan. Usually when you're talking to them, They might give you the answers if they call you back, right? They'll give you answers about the mortgage stuff, but they can't say to you, hey, I noticed you have a student loan debt. Let's get you over to the law office of Paula Krasker and see if we can get that student loan debt wiped out or reduced, right? And that'll really help you out on your mortgage. Or, hey, with that refi, how much are you paying on insurance? Maybe we should get you over to Ross and see if we can get you a better policy, right? To help. Let's say they're trying to reduce their payments. If you call Mike and Mike see there might be a way to save money through the mortgage and also by calling up Ross to get a different insurance policy, one-stop shop, right? You just give us a call and we're going to try to point you in the right people. And if we don't have the people, we're going to try to get them for you. And if we don't know the people that are legit, we're not just going to give you somebody just because we know somebody fills that slot. They have to meet the Florida Talk Real Estate Standards, which is trying to help people. So anybody that needs help, all you got to do is pick up the phone and give us a call. I promise we'll call you back and we'll get you the answers that you need.
Yeah. You can call 888-973-7828. That's 888-973-7828. The hotline you'll find at floridatalkrealestate.com. That's floridatalkrealestate.com, your one-stop real estate shop. You talk about a standard that's been established. It's 12 plus years establishing that standard. Integrity, doing right by the people. It's about your timeline, what you're trying to get done, and to give you the options that are possibly there for you so you can make the right decision for you and your family, your future. And that's caring about the community and everybody that gets touched by the team, whether you reach out or we reach out. Sometimes you get an email. Sometimes you get a phone call. Everything good? Do you need anything? And that's just about part of the caring, the Florida Talk Real Estate way. Remember, floridatalkrealestate.com. Know it, use it, love it, share it on Facebook, on YouTube, Florida Talk Real Estate. Keep it in mind. Whether you're buying a home, selling a home, stuck with a home, you don't know what to do, and everything in between. Let's do a little reset. We get back. What are we going to talk about, Jimmy D?
On the flip side, we're going to get into inflation, and we're going to talk about that chart about what things cost today and where we are in inflation at this point, because this is going to build the foundation of where interest rates are going to go next year.
All
and
right.
that's what we're going to really focus on.
Here we go. 4-minute break, and we get back to it. Thanks for being with us every Saturday. 2 hours of infotainment is what we offer up, and thanks for being there to consume. It's Florida Talk Real Estate right here on Real Radio.
The visual aid you need for all the freaky stuff we talk about on the radio. Find it at realradio921.com. Here's what's happening with the weather on Real Radio.
From the Gordon Partners Weather Center, have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
I'm CBS 12 meteorologist Charlotte Carl. Breezy conditions expected to stick with us through midday. We will start to see those winds wane in the afternoon, still ushering in cooler and drier air, seasonable temperatures into the upper 70s and low 80s this afternoon. And then we also keep that isolated chance for rain in the forecast through tomorrow.
This report is sponsored by Lowe's. It's Black Friday build-up at Lowe's. Get up to 50% off select major appliances. Plus, take an additional 10% off when you buy select major appliances. Valid 11/6 through 12/4. Cannot be combined with additional discounts. See Lowe's.com for details while supplies last.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paula Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house? Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
You're listening to Real Radio 92.1. And we are an iHeart radio station. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
877-927-6969. Not an echo, just making sure you know that's the toll-free number. If you'd like to be a part of the program. Questions, comments, concerns in the world of real estate? Want to dive into the conversation at hand? You're more than welcome. Plenty of time for you on this Saturday. I'm Johnny C. Timothy's our producer extraordinaire. He'll line you up, I promise.
Hello. Good morning.
What's up, dude?
Doing good. How are you, John?
I'm good, real good.
Excellent.
Always good to be with you guys. Like Ross Komarinetz, Brightway Insurance, Juno Beach. Always great to have you to my left. You're right out there. Wait. I don't even know what it looks like on the screen. I don't either. I think you're below me.
Yes.
Oh, yeah.
Yeah, that's weird.
We're Ross and I are dangling right below you.
That is.
Oh, wow.
So,
Now you had the word dangle, and boy, that just changes that whole phrase.
well, I had it in my head, so it doesn't change much for me. Nice to see you as always, Ross.
You as well.
And Mike Rauch, the mortgage guy
right.
from the mortgage firm. Good to be seen too, I assume.
Yeah, of course.
Okay.
Yeah. I real quick, I saw there was high praise for us from one of the Facebook commenters, Jackie. She says, Florida Talk Real Estate. It's good.
That's a commercial.
Which actually, I really like. I really like that.
That's a commercial.
Thanks, Jackie.
Tagline.
Yeah.
It's got to be, we got a just a little bit of pause in there, though.
It's good.
Florida Talk Real Estate. It's good.
It's good. It's good. I like it.
Yeah.
T-shirts are printing now.
Oh, it's so good. Oh, look at that. It just rolls off the tongue now. It's so good. Is it so good? Our fearless leader, 12 plus years now, I've told you, runs a top producing Keller Williams team at Keller Williams Innovations. You find the Florida Home Pros team. And Jim DePola. Jimmy D, how you be?
Pretty good. I think we're like less than 10 weeks out and we'll be 13 years on the air. Can you imagine?
Lucky number 13.
Yeah, right. Exactly. Just want to do a couple of the shout outs. Elaine, thanks for checking in. Mom, thanks for checking in. Francis, you're always here every Saturday. Thank you so much. And of course, Jackie, thank you for being, not only did Jackie give us a "it's good" comment, but she shared this to another person that she wanted to watch the show. So thank you so much.
Awesome.
For that. That's the way that we grow and help people. So thank you so much. I wanted to get into the whole inflation thing. because this has really been driving me crazy. So I'm going to look up the T-bill right now as we're on the air. Okay, so when the Fed cut the rate September 16th, we were at 3.6 for the Treasury bill, right? 10-year Treasury bill, which is kind of really the main indicator for what mortgages are going to do right this second.
Yeah.
And I also read a stat, Mike. I don't know if you know about this. Maybe you don't use this or not, but I read in one of the articles that you take the 10-year Treasury bill and you add 2.58 to that number, and that kind of is what the going real estate, the mortgage number is at that moment,
2.58.
Yeah, that's what
I didn't
they
know
say.
that.
I don't know if that. So let's just check this out. So
sure.
we're at 6.445, right? So if you add 6.44,
No. Where are you at?
10-year Treasury bills 4.445.
There you go. 4 point. Yeah.
Yeah. What did I say?
6 points.
Oh, I don't know. Where
You've already added
yeah.
the 2. You added
So
the 2.
if you add 2.58 to, if you could do it,
I'll
Mike,
try it.
4.44.
Okay.
So 8, that's 12. One up
Yeah,
there.
we're 7.
2, 9.
What is the number?
7.02.
6.97. Is that right? How can I not add this right? My brain isn't working.
Jimothy got it.
7.02.
7.02. Right.
And then you need to back that off. So because that's a live thing. Remember, Freddie Mac is the one that we use for like
we're
mortgage
get
rates.
to that too. Yeah.
But Freddie was last week, Thursday to Thursday, not like
instantaneous.
The instant.
Right.
Yeah.
So 7.02 in real life on the refis or mortgages that you're doing over the last week or so.
Yeah.
Is that kind of in the range of where you're at?
Yeah, absolutely. 7.02. The one thing about Freddie's report, what they no longer do is they no longer put the average of points paid for the rate.
I noticed that.
Right. So they used to include that. It was always around like 0.75 or 1 point as the average connected to the average rate. So 7% easily, even though Freddie's saying 6.7 something, 7% could easily be the rate that you land at. Depending on your circumstances, how much money you want to pay to get a lower rate, but you'll say a par rate, no points, a decent credit, 5%, 10% down, something like that. You could be at that easily.
And so the reason why I'm bringing this up is that the theory is when the Fed cut the rate back in September, and they cut it big time because they cut a 0.5 point, which they haven't done in a very, very long time, over a decade.
It was huge.
Yeah, it was huge, right? So when they did that, everybody was expecting that there would be the surge of buyers, surge of refis, and that everybody was just going to come out of the closet and start because the mortgage interest rates go down, but they didn't. When the day that the Fed cut the rate, we were at 3.6 for the 10-year Treasury bill, and now we're at 4.44. So we're up 0.8 since more than 3/4 of a point since they quote cut the rate.
Right.
Then we had another. Did we have another cut yet? Quarter point.
Just last
we
week.
Just had another
half
point.
0.25.
And we're
Nothing.
basically we're flat. We're flat.
Well,
where we are.
You know what's funny too, Jim, is we were talking about like the week that the Fed did it. The week after that, we said, well, why didn't rates go down? And we were saying, well, the rates it's already baked in, right? Mortgage rates had already dropped, kind of anticipating this Fed move. But now since then, the Fed not only, they didn't go back up, they also reduced it another quarter. Mortgage rates have gone the opposite direction. And it's like, so it wasn't even baked in. It was just some sort of sentiment out there. They came down, and then all of a sudden, the market makers are like, wait a second, this isn't quite right. The 10-year Treasury starts yielding higher, and mortgage rates follow that. Yeah.
I heard about this off air. When I say off air, I heard about this before the election, and I don't want to get into politics because we don't like politics on the show to talk about it. Everybody has their opinion. You can have your opinion. That's great. That's what America's about.
But the Fed's non-political.
Well, but
this
point I'm going to bring up is some people are going to think it's political, and it isn't. I'm going to just say, okay. So I just want to say, because I'm on tippy toes on here, because I don't want to have a whole bunch of people calling up and turning a politics show, because I just don't care.
But we can
about
edit out everything you just said. Jim.
Yeah.
Like it's gone.
So, but what they're saying is, when we originally were talking about being baked in, that's what we were saying.
Yeah.
It's going to be baked in. We were even predicting it was going to be baked in, right? We were already predicting that. So that wasn't the surprise. The real surprise was It kept going up and up and up. We didn't expect that.
Yes.
So the reason why they're saying that, and this is not just one news organization. There are all types of news organizations: Forbes magazine, Wall Street Journal, CNBC. Some of the investment news organizations that have newsletters and talk about this. They're all in the same agreement with this, and it's something I heard from one of the bankers I'm working with up in New York, which is the reason why the interest rates have not dropped is because they feel that we're going to be in a continued inflationary situation, partly because of the tariffs that they think are coming. They're thinking if the tariffs do come, it is going to raise prices.
Ooh, I thought you said terrorists for a second.
Oh, no, tariffs, taxes on foreign goods, right? So they're concerned about that. And the inflation hasn't really, the last inflation report, which is what we're going to get into now, it actually went up a little bit. So just to set it up, about 18 months ago, 2022, we were at 9.1% inflation, which was crazy high. We haven't seen anything like that in over 20 years. And then over the 18 months, they got it down to under 3. How much under 3 is up to anybody's opinion, because we've heard 2.2, 2.4, 2.8. But somewhere under 3, they're trying to get it to 2 flat. And it looked like that was going okay. And the reason why the Fed cut the rate so dramatically is probably because we got a weak jobs report. And the Fed's job is to do 2 things. Number one, have stable employment and to keep prices under control and have a, quote, strong economy, and making sure that we have a strong economy is partly prices. So they have to deal with inflation, or anything related to inflation and employment. That's the 2 big things that they're responsible for. So they got worried about that employment was going down. They dropped the rate, but the bankers said, we're not buying into it. We're going to keep the rates where they are. And then they actually went up. So we just had a report that came out this week. And what it showed is that compared to a year ago, our inflation rate was 2.4%, and now it's 2.6%. Okay, so we're up 0.2. That's kind of we're in the range of where they expected it to be, but they're not happy it's going up. And everybody's worried that could be in a new inflationary period again. And that's what everybody's keeping an eye on right now. So where are we with regular stuff, though? Because this is what I always find out. I always say,
well, can I just interrupt
Sure.
real quick? Isn't this the time of year where you should always assume inflationary period? We're in the time of the year where people are going to spend money.
Yeah.
Yes. Of course. This is the inflationary portion of every year.
Can I play devil's advocate?
I mean, you can, but that's
September. You know what I mean? That's not holiday shopping to me. Is September.
I don't understand.
Well, Christmas is getting earlier and earlier.
Yeah.
Every single year. Like if you walk into a Home
the
Depot
advertising part, I get that part. Yeah.
September,
November 1.
They're breaking down the Halloween stuff. Bypassing Thanksgiving. Nobody buys anything for Thanksgiving, and then Christmas is there, right?
Yeah, but you're talking about the September cut. We're talking about. What about this one? They just did it a week ago.
Yeah.
A week ago. And you're talking about jobs. Like, I get it. It's hilarious. The week after they did the cut in September, the jobs report was way better than expected. Right. So, like, they can always kind of pin it on what they want. They've been late to this dance the whole time. We should have been raising rates, and we're going the wrong way again. I'm getting off the rail.
I'm worried about that. I'm worried about that too. We are going to talk about later on. We're going to talk about where interest rates might land next year, like what we should expect next year for interest rates, and that's going to be interesting for buyers and sellers.
We should
going to want to hear
listen
about
to last year's predictions, because I think if rates stay where they're at right now, I think I'm winning that prediction battle.
I was thinking that we would be at 5.5 to 5.75 is where I thought we were going to be. So I'm way off.
I feel like I said something like
point off.
This was in December, and I feel like I said we're going to be about where we are right now. So I think that's and then last December, we'll have to listen back to the show.
Yeah.
But last December, remember, we were coming off a November high. Last December, We were at 6.61 last December week, and now right now we're at 6.78. We still got 2 months to go, or a month and a half to go.
Yeah,
but we're there.
Yep, you're probably right for this year, Mike. Because I was thinking, because the economists were thinking that we were going to be at low 5, right, like 5 flat, and I was thinking I don't think that's going to happen. But Mike, if that's what you predicted, you were close to me because I'm a whole point off.
If I win,
we'll figure it out. We'll figure it out later.
All right.
But so let's get into the inflation report because I always find this interesting to see what people think about this. So hold on.
I'll say one thing on that. So if you have we had the 9% inflation, those prices went up. And then now we're at 3%. That just means we haven't gone back to pre-9. It's just the prices have not only gone up another 3%, something along those lines since then. So
you have to frame it appropriately.
Yeah. Yes. I mean, the prices are still higher than they were 2 years ago type thing. It's not like we've come back down and now we're holding, right? True. So, I mean, some things do. Jim's about to tell us.
I kind of, if we're supposed to have 2% inflation, and let's just say that COVID happened in 2020, right? And it's been 5 years, right? Things should cost about 10% more than they did five years ago, right? And people don't take that into consideration. And I don't get that part.
Well, disconnect. What's the baseline? So is it month to month, or 3% month over month inflation, year over year? I don't really know. I guess it's a year over year indicator, right?
They try to do year over year. Yeah, the monthly. They do just like with real estate. They do year over year
this month,
and they do a little bit month to month, how September compared to October, a little bit, but it's really year over year.
Okay,
right. So let's get into what happened with this most recent consumer index report. So here's what's happened: prices have declined for many consumer items over the past year. Right. This is called deflation. Prices going down. Largely, that's been for physical goods, such as new cars, appliances, and consumer electronics, as pandemic-era supply and demand contortions return back to normal. Now, there are some things that the things that are keeping inflation high right now, housing is number one. Housing is still screwing up inflation because prices have not dropped yet, even though expenses have gone up to buy a house. And the other one was housing.
Probably just going to blame it on insurance.
Yeah.
Actually, thank you, Ross. Thank you, Ross. I can't
auto insurance.
Auto insurance. It was auto insurance, not homeowners, but auto insurance. Thank you.
Oh, that's right.
Forgot about that. Always got to do
Brightway might have to change their name.
We'll take out the insurance part.
Depressed way or dim way, right? Depressed way, nice. Dim way.
I like Ross's way better.
Yeah,
it's just Brightway.
Oh, and let me tell you something. I wanted to talk. I should have done the shout out at the beginning. I had 2 customers tell me when I talked to them this week, just as an aside, without even they weren't doing it to say, hey, this or that. We were just talking, and all of a sudden it's like, oh yeah, I called Ross last year and he helped me with this or he helped me with that. And it's just so nice to know that they just feel like that they have a go-to person to come to and everything. And one person, you save them not a lot, but $200 a year on the policy, but it was still a savings, and they looked like they were going to go up, and they were very happy, and they felt like the coverage they got and the explanation of the coverage they were getting and everything was great from your staff.
I mean, $200, that's enough to overcome the price of milk.
Yeah, let's go.
Right?
Yep. Well, so let's go. Let's talk about
unless there's significant upgrades in coverage. Typically for $200, I'll tell somebody to stay with
Yeah,
I'll show it to you, but I'll tell you, I don't know if you want to go through new underwriting and all that for $200.
Yeah.
Although it's kind of pain-free, it doesn't cost anything, right?
No, but I mean, you do have, now you're going through underwriting with a new insurance company. They're all doing inspections. Are they going to come out and say, I don't like that putt,
Could be more trouble than it's worth.
Yeah,
okay.
Exactly.
Okay.
Yeah. So let's talk about what things cost today. So first we're going to talk about food at home. And then the second part are going to be.
So
delivery groceries, grocery stuff. Okay. Gotcha. And then what we're going to talk about after that.
Grubhub.
Wait, I can't find it. Maybe we're not going to talk about that.
I wonder if they would include the cost of the delivery.
Oh yeah,
in the inflation. Like if people are getting their groceries delivered, the inflation's gone up for them, right? Because it's just,
absolutely,
especially food delivery.
I can only imagine
restaurant. I see we all have youngish kids, but mine are of the age where they kind of have their own money, and then you'll see like, oh, they had whatever food delivered and it cost them $10 or $12 more than it should have, and it's like, what are you doing? Like, are you crazy? Like, you're just throwing your money away. You didn't want to make something, or you didn't want to run out and pick it up yourself.
And the worst part is it wasn't that good either.
Yeah, no,
right. It is even worth it.
Put yourself back in at that age, Johnny. You didn't really need. You weren't you're not looking for 10 out of 10 on your meals.
True,
this is true. You're like,
but so
fill me up.
The difference for me, my hard part is because I'll jump in the car. I don't give a damn.
Yeah.
Especially if you're buying, I'm flying.
Yeah,
that's easy.
That's easy. Right? Yeah, that's easy.
Oh, that's so funny.
And then you got cost of gas. I don't know.
Well,
yeah. And then you got to insure the car.
True.
We already talked about
Wait a minute, you have to
that
insure
is.
the car?
I mean, you don't have to. It's recommended.
Do I have to register it too?
I mean, no.
Do I have to buy it?
You don't have to do any. Are you a free citizen, Johnny?
Yes.
Yeah.
Yeah.
You're just traveling, right?
State,
You're just
Are you going to give the government money for the right to drive your vehicle?
I don't think so.
Come on.
It's a God-given right.
So, speaking of energy, because I can't find the chart right now, so I'm just going to tell you the energy thing. Gas is down 12.3% compared to last year. So that's one of the things that really help.
Who do we thank for
inflation? Huh?
Who do we thank for that?
I did that.
Oh, you did that.
Johnny did it.
You did that.
Yeah.
Thanks, Kamala.
So, yep. So, let's get into. So we're going to stick with food, not the other stuff, because I have the chart here and it's gone. Okay. So let's see what would be. Okay, this is one that they talked about in the media all the time during the election. So we're going to talk about it. Bacon. How much is not how much it costs? Is bacon up or down compared to last year for prices?
You mean pork bellies?
No, just regular bacon. No, because we're going to talk about ham after bacon. So what about bacon?
I don't think bacon ever goes down, does it? Ever?
I'd say flat.
We're talking year over year.
These are percentage year over year increase or decrease.
I'm going to go up.
Okay, up. Okay, what do you think?
I'm going to say up.
Up. Okay.
Yeah.
Down 3.5%.
Huh. Wow.
Okay. Ham.
Down.
Well, come on.
Excluding canned ham. I don't know.
Canned?
Yeah. So we got it. So that's going to make it much harder. It's going to make it much harder. Up or down?
I'm going to say flat then.
Down.
Taylor Ham's
It's going to follow bacon.
2.7% down.
Nice.
Down.
Nice.
Fish and seafood.
Fish and seafood.
Up.
Yeah, man, it's got to be tougher,
I'm
right?
going to say down a little bit.
It's got to be tougher.
Cost of fuel.
Going up.
Oh, wait. Fuel was less.
Yeah, fuel was less.
Maybe it's down
Are
slightly.
we going
Jim. Down.
farm raised or wild caught?
Yeah.
Doesn't say. It doesn't say. It says shelf stable. So I guess this is like canned,
Tuna.
right?
Okay,
I'm
tuna.
guessing it's like canned
Shelf
fish and
stable.
seafood.
Yeah. That's
So
down.
2.3% down.
That's down. Nice.
Okay. Just so you know, the highest percentages we're talking about are less than 4% and more than 0.5%.
Well, except for gas, huh?
No, I'm saying the range of these,
Oh.
just so you have an idea. Nothing's 20% up or 20% down. We're only at a 4% to 0.5% range.
Yeah,
up or
we're not
down.
talking insurance right now, right? Sorry, Ross.
Oh my God, beat up on Ross.
I mean,
today?
listen, we could throw in interest rates in there too.
No, but
Yeah.
seriously, I had a phone call where somebody called me and said, "Hey, I got my renewal. It went down. What's going on?"
What is
And I
happening?
said, "Is this the next 4 years of my life? I just spent the last 4 years of my life having to deal with rate increases. Now people are upset that their rates are going
Yeah,
down."
why is my rate going down?
Damn you,
Ross.
Yeah. What is
Damn you.
Yeah.
I hate it when that happens and my insurance goes down. I hate it when that happens.
Are you hearing that a lot, Ross?
I mean, I'm seeing rates either be stable or go down a little bit,
Okay.
but that was my first inquiry as like, hey, why did my rate
What's
go down?
going on in
Yeah.
this world?
Yeah.
I mean, I guess it goes to show, like, if you've seen, everybody's seen increases in their insurance, so it's just like make the call and see. It costs Ross his time or his team or whatever, costs time and energy to do it, but For you, it's just a phone call. Right?
Yep.
Couple hours waiting to look at your email.
Yeah.
FloridaTalkRealEstate.com.
So with the groceries, I'm just going to tell you this. They didn't have anything that went up. So they were only showing things that went down.
Okay.
That's going to be an easy game.
And yeah, so the reason I'm gonna wrap this part up because I did find the chart for the other things. So and I want to talk about that because that actually is more interesting. But the grocery stuff, turkey's down the highest down, highest deflation prices for groceries is turkey, 3.9% down.
I'm going to take this chart into the grocery store and be like, what's going on, guys? Look, this is what's happened in the world. Why is your turkey still so expensive?
Yeah, there you can
it should be down. And your costs are down.
Snacks are down 3.6%. Bacon, ham, fish and seafood, margarine, lettuce, potatoes, white bread, bananas, canned fruits, frozen vegetables, pork chops.
Pork chops are down?
Pork chops and applesauce.
Pork
I just
chops
watched that on YouTube.
and applesauce.
I just watched it on YouTube. I just watched that just a
What about
little
just
bit ago.
meat? What about like
lunch
beef?
Lunch meats are down 0.8%. Roasted coffee 0.6%. So all those
Roasted
things
coffee.
I just mentioned are down somewhere between 0.5% and almost 4% down. So we're seeing a lot of things that people buy every day slowly going down over time.
So it hasn't
Energy-
been the worst it's ever been?
What do you mean as far as inflation?
It's just like everything.
Oh.
Nope.
No, I think that people feel like it's the worst it's ever been, but I don't think it's even close to the worst it's ever been or even going to get there, hopefully.
The only
right?
thing I actually pay attention to or just know the price of that I've always bought is this one like soda water from Publix. It
Tang.
used to be 98 cents. Now it's $1.05.
$1.05.
It's like
So 98
7%.
cents, that's like
Yeah.
6%.
Yeah.
That's probably like 6% up.
That's substantial.
Yeah.
Yeah, 6% over
Water.
everything.
Yeah.
Yep.
Water.
And then
Oh, is
You
it
could-
hydrogenated?
Nope. Just
Yeah, I was going to
It
say, have you
has
considered you could get your own
bubbles in it.
CO2 and just infuse it yourself, Ross? Because the regular
I have one
water
of those
it
machines.
hasn't gone up.
I have one of those machines.
I used to have one of those.
Yeah, they're a pain in the butt. So with the energy, here's another thing. Gas is down 12.4% for regular,
Unregular?
unleaded regular, and all energy like oil to to fuel your home and things like that. All energy is down 4.9%. So energy's down pretty big compared to food. It's down a lot. Now all items less food and energy. So if you take the food and the energy out, here's a couple of subjects we have: telephone, hardware, and calculators, dishes and flatware, car and truck rental, men's suits, women's outerwear, computers, televisions, bicycles, used cars and trucks, outdoor equipment, window and floor coverings.
TVs are cheap.
So
Window and floor coverings?
yeah, so you
With
think
like carpets and drapes?
yeah, things like that, tile,
Do they match?
Do they match?
right? Yeah, there they got it. So
I would imagine it affects the
all
cost.
of the all of
Everything's
these,
down.
All of these are down, and they're down a lot. Like food, not the highest we saw was 3.9%. Like calculators and telephone hardware. I guess these are phones.
Man,
My
things are doing good
calculator
out
went
there.
up.
It says down 9.6%.
Tip calculators.
Car and truck rental down 7%. I found that to be surprising because I thought car rentals are pretty high right now.
You know
Yeah,
why
they
they
were.
feel high? Because the last time you rented a car was probably a long time ago, and then you went to rent it now, and you're like, "What is going on?"
What?
Like
Yeah.
you could get a car for a day for like $22
Yeah,
at
it's
some
not-
point.
Not the
Right?
case anymore.
No, now it's like $900 for a week. It's like, what's
by the
happening?
time you add all the fees in,
Oh, of
that's the problem.
course.
That's one of those things where you see what the price is, and then by the time you pay the bill, there's
Oh.
22 fees that are added into
that's
it. It's
right.
like, where did that all come
Yeah.
from?
Surprise.
Televisions are down 4.5%. Computers are down 5.4%.
The problem with TVs is that you have to buy a new one every 2 years now because
I know,
they
right.
start to fail.
Yeah, I know they do.
But they're
Um,
cheap.
Yep.
So
That's why we like it, Mike.
I mean, you get a big
Nice and
TV for $400. You just have to buy another one 2 years down
Just
the line.
consume
it's
it and
true.
put the other one right at the.
If you're gonna
Just
get one,
throw
you
it
should
away.
do it before any tariffs get slapped on them. That's for sure.
Oh, that's a good idea.
Yeah.
exactly.
Hey guys, go get your TVs.
I sound like I'm hawking TV.
Yeah.
You better go buy 'em
Go
now.
down to
Go buy 'em
Johnny's
now. Go to Johnny's.
TVs or
Johnny's
warehouse.
appliance store.
Yeah.
We got electronics on top of electronics.
The prices are crazy.
Actually, an enterprising person might gobble up a bunch of these
Remember
TVs
when-
before, and then just, resell them.
Remember when
Or
Elaine
possibly,
on
yeah.
Self
Maybe a big
Seinfeld
shed.
dated the appliance king guy and he dressed up like a king? and he was on the commercials.
The
all
Wizard.
time. Oh, yeah, the Wizard. Yeah,
the Wizard.
appliance
The
Wizard.
Wiz.
Yeah, the Wiz. Yeah, that was funny. That's what I was thinking.
Can't beat the
when you were
Wiz.
saying that. So,
Bachelor City.
there's so many things that are down. And last time I looked at this chart, they showed the things that were increasing, like the things that were going up versus going down. Maybe we're seeing mostly down, and that's why this chart didn't have it this time, because this article comes out every month. So we're probably in a and I'm not saying this is a negative thing, but that's called deflation when prices go down. So we are deflating, but we had that little spike from September, October. We went from 2.4% annual inflation rate to 2.6% annual inflation rate. So it isn't over yet, but we've been heading in the right direction. We'll just see if that continues or not. But where it isn't heading in the right direction right now, as far as cost effectiveness, is the real estate market, because of interest rates and insurance is causing problems. So let's go ahead and take a break. Okay. And on the flip side, we are going to talk a little bit about insurance. What are we going to talk about? Hold on. Let me see which one is it, because Ross doesn't even know yet, so I got to tell him right now.
Oh, that's always fun.
Yeah, he always loves this part. Let's see. Hold on. Almost there. Hold on. It's important.
Well, I can tell you while he's looking.
I'm holding.
Okay. I have a chart, an interactive chart that shows the whole country and where insurance rates are the highest and where they're the lowest. So we're going to take a look a little bit about that.
I'll be curious if there's been any developments post storms, like what's it look like as far as claims and stuff like that. I don't know if Ross might have some.
Oh, I'm actually holding an article for next week, because I figured this week, because we're so far behind from missing a week. But if you come on next week, Ross, or the next time you come on, the big question is now that people have already signed rights not to sue the insurance companies. There was an article I read where they talked about how insurance companies are not being sued as much, which is the whole point of those changes, which is why we've seen rates kind of go flat and even go down slightly in some cases. Good news. But now they're worried. The big question was, now that we have all these damage, are there going to be a whole flurry of new lawsuits that are coming into the market and like kind of take away all the progress that we've done up to
right? Like, are the insurance companies
going to be
taking advantage that you can't sue them, and then they're playing hardball on every
right?
Every
or maybe people have a loophole. Like
the key was fraudulent claims, right? Sure. If they're being forced to sue their companies because they won't pay valid claims, we can't all be affected because of that. Y'all are forcing that. Just pay the claims, right? I mean, there's the real detail is fraudulent claims.
It's true. And I'm wondering is, the businesses are always going to try to figure out a way to get around things. So maybe they'll figure out a loophole or something to say, hey, and start knocking on your door again. Hey, I know you saw a broken tile. Do you want a whole new roof?
Oh, yeah, every week. I have somebody
get that.
Every week somebody knocks on my door about my roof.
Wow. I know you mentioned this still.
Every week.
Is it just your house, Johnny? Or are they like going to the neighbors?
They're like, this guy needs a roof.
Right. They drive by and they're like, whoa.
Yeah, I am like the beginning of my neighborhood. Yeah. I understand. And we've had some roof work done. So I think there's an opportunity where they're like, hey, I don't know if you've seen your neighbors. So it might just be the perfect storm of location. And there's a couple of roofs being done. So it leads to that easy. I don't know if you've seen your neighbor getting their roof done.
Sure.
Because then you can be like, oh, yes,
They've infiltrated.
Yeah. Right.
You're like, really? They're doing that?
They just, no.
Do you pretend that like, this is the first time anyone's ever come knocking on my door about
you know what I do? This shuts it right down. I'm like, let's jump up there right now. You got a ladder? And they're like, no. And I'm like, okay, bring back the ladder and we'll go inspect it.
Okay.
They never.
Surprised they don't have ladders.
They park at my park and then walk the neighborhood. Yeah.
All right. Well,
getting their steps in.
Yeah, getting their steps in. That's right.
So the young enterprising roof salesman
should bring an extension ladder.
Bring a ladder.
Yeah, for clowns like me.
Yeah.
They'd be like, all right, Tubby, let's get up there.
Come on, asshat.
Hey.
You open the door.
I didn't have a ladder, but I got my drone, sir.
A boost job.
Yeah. You'd be like, hell, break out the drone.
Yeah, let's do it.
Oh, that's sweet.
Let's do it. Look at that roof. It looks about 10 years old. All right, kiss it.
We're going to take a break, and on the flip side, we're going to talk about where insurance costs the most. You're going to be surprised that at the premium increases across the country. You know, they think Florida is the only one that's having problems. Some of these stats I saw in other states, it's pretty surprising too.
Nice.
You know, so
Misery loves company.
yeah, so we're going to take a look at what's going on with the insurance market across the nation on the flip side. And then the other thing I want to talk about with Ross is tips on when you're putting on a new roof. What upgrades you can do to the roof that would get you a discount on the insurance. Remember we talked about that, Ross, just earlier this week about secondary water barrier and strapping.
Right.
Okay.
Right.
So we're going to talk a little bit about that and whether, you know, because roofers offer that and you do get discounts on it. So wanted to talk to you about that too.
Very good. We got a lot more to get into. Another 53 minutes or so remaining for you on this Saturday. Great to have you with us. Always remember, Florida Talk Real Estate is .com, your one-stop real estate shop. FloridaTalkRealEstate.com. All the team available for you. Pros, experts in their field. We call it the one-stop real estate shop for a reason, because you get them all at FloridaTalkRealEstate.com. We're back in 4 minutes. Florida Talk Real Estate right here. It's Real Radio.
We're everywhere you need to be. Find your favorite show at realradio921.com.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to FloridaTalkRealEstate.com. That's FloridaTalkRealEstate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation, because FloridaTalkRealEstate.com has you covered. That's FloridaTalkRealEstate.com.
From the Anajar and Levine Accident Attorney Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Listen on your free iHeartRadio app for all your music, radio, and podcasts. Free never sounded so good. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
All right, though. Great to have you with us on a Saturday, every Saturday. Thanks for choosing to consume 2 hours of infotainment. 9 until 11. We'll get you there. Johnny C., that's me. Jimothy's our producer extraordinaire. How are you, my dude?
Hello. Good morning. I am doing well. Thank you, Johnny.
What's on after us, by the way? Do you know?
We have the Florida Panthers Insider Show that'll take us from 11 until 12. And we got a Florida Gators game that starts, coverage starts at 12:30 today.
So no locker room at all today?
No locker room at all today.
All right. Panthers, they're hosting the Jets tonight.
The Panthers are hosting the Jets?
Yeah.
There's a Jets hockey team?
Oh, Winnipeg Jets?
Yeah, Winnipeg
Jets. Yeah. And the Jets are on fire, right?
Oh, really?
Oh, my gosh. This should be a really good game tonight. And
Too soon, Johnny. Too soon. September 11th.
Sorry.
Yeah.
I'll let that marinate a little while. They're rolling right now. The Panthers are too. They had a 7-game win streak snapped in, and then they're obviously still the champs. So big game tonight down at the Amarant, and then a quick turnaround. They're at Winnipeg, like a couple of games. So go Panthers, huh?
All right.
Go Cats.
Yeah, go Cats. Johnny, Jimmy, Panthers are up next. Ross Komarinetz is here with us on a Saturday. He's with Brightway Insurance, Juno Beach. What's up, Ross?
Juno, that's right.
Good to see you, my friend.
You too.
Mike Rouse here, too. He's the mortgage guy from the mortgage firm. It's always nice to see you on a Saturday.
Juno, that's right.
You know it.
You know it.
You know it. And Jimmy D's over here, too.
Buddy.
It's Jim DePola. He runs the top producing Keller Williams team. Keller Williams Innovations find the Florida Home Pros team. That's that top producing Keller Williams team. Jimmy D, how you be?
I'm doing good. I'm just looking here at this interactive chart from, where is this coming from? The name of the group is called Fast Company, but it has a breakdown of the United States, and they looked at the top 500 counties in the country to see the 3-year change in median annual home insurance premiums by the county. Okay, so they were looking at the median annual home insurance premiums for each county over the last 3 years. And let's see, out of the top 15 counties that had the highest increases from 2020 through 2023, out of the 15 counties that are listed here, how many of them do you think are in Florida? So there's 15 counties.
6. I was going to say 5.
10.
1. I haven't counted them yet.
2. You say 2?
No.
Oh, it's guaranteed 3.
So who said 6? 6 is the highest number?
I said, what did you say,
I
Ross?
said 6.
10. I said 5. Yeah. I said
you
5.
said 10?
10.
Oh, you're almost there. 9. 9 out of the 15.
Okay.
But here's the interesting
And are the
part.
rest in California?
No. You're going to be amazed. The number one highest insurance premium increase in the country by county, Prince William County in Virginia.
Okay.
150% increase over those 3 years.
Oh.
Right? Now, the highest Florida increase, according to this report, is Flagler County at 79.7%. So while we have the most counties in the list, we're not in the highest grouping of those counties. We're up there, but we're not. So number one, Prince William County in Virginia had a 150% increase in insurance premiums from 2020 to 2023.
I think that has to do with new construction, right? Like that's a county that's expanding very quickly. There's a lot of building in Northern Virginia, those areas.
New
So they have to-
construction is normally cheaper.
No,
that's
but
what I would
but-
say. That's what I was going to say.
No, it's cheaper in Florida. I think you're talking about when they're building a whole bunch of new homes, right? And you're comparing with homes that are older, maybe less valuable, right? Like your insurance, you would think is going to be
Oh,
more
you think
expensive.
the homes cost more? So
Yeah, the homes are
insurance
more
is gonna
valuable.
be
They're building
yeah.
new homes
Okay.
versus
That might-
older
that might-
neighborhoods.
Yeah, that might be true.
But
'cause
value doesn't have anything to do with insurance.
because it's the replacement, right?
Mhm.
Well, but what if you've got a Prince William County traditionally, suburban areas, homes that are, less than 2,000 square feet, and then you're building a bunch of 3,500 square foot homes or something like that.
Yeah.
Am I thinking wrong on that? I'm just guessing.
Well, I mean, that would,
because Prince William is not like a disaster zone. It's not like they're
Right.
flooding, wildfires, like none of
what
that.
do they, I mean, I guess, how are they calculating it? Like, is it the average premium, or is it like a kind of like a rate?
It's the medium. So half are higher, half are lower in the county.
Yeah. So, I
And
mean,
that's
you could just have 30 mansions.
Right.
Yes.
Right.
Right.
And
that's what Mike's kind of going through.
Yeah.
So number 2 is in Louisiana, St. Tammany. How do you pronounce that name?
Tammany?
Tammany. Yeah, thank you.
Is that right?
Tammany. I'm having a problem. Tammany. Paris, Louisiana, 117%. Oh my God, I can't pronounce any of these Louisiana counties. Calcasieu. I don't know how to pronounce it. Parish in Louisiana, 90%. Weber County, Utah, 86%. Then then the next one is Flagler County, 79%. Martin County, 77%. Santa Rosa County, 76%. Escambia County, 74%. Lee County, 72%. Wow, that's 5 counties in a row. So we're all clustered in the 70s, basically, is what we've seen. 70%.
Yeah, but remember when we were getting our bumps, we were hearing like 40 was like that big number. We were like 40% increases. We were like, oh man.
I mean, I saw some 100, 150.
Yeah.
I mean, I saw some craziness.
So when you're seeing 70s in counties, like, to me, that's pretty remarkable through a 3-year span. I know we're downplaying it compared to a 150, but that is tremendous.
So they have on this chart, it's colorized, and I'm kind of colorblind, right? So, but it shows like white being very low, no increases, right? And then dark blue is like super high increases for insurance premiums. So you can have a visual of what it looks like in the United States. So Florida is like completely blue, right? And then Louisiana is almost completely blue.
But these are medians, right?
Right, these are medians. But I'll tell you where the other area that's being hit as hard as
I just
Florida.
looked it up, Jim. It's Calcasieu.
Oh, Calcasieu is how you pronounce it? Yeah, thank you, Mike, because I would have never known.
I was super curious.
Never known.
Calcasieu.
But
I don't know if I'd have got there.
The state that's being most hard hit besides us and maybe Louisiana, like you would expect those two, right? Because of the hurricanes, is Colorado. They're getting creamed out there, Colorado. Actually, Colorado and Utah.
Why?
Yeah,
it's got to be the same thing. I'm thinking new construction, like expensive homes. I don't know.
That's the only thing that makes sense.
I mean, I pay attention to some of the little groups I'm in that are national, and they're all complaining all over the country about how rate increases. And I mean, you're going from 800 to 1,200.
I can't believe you just said that. That's exactly Box Elder County in Utah. In 2020, now it says they had a 66% increase, and you're like, oh my God, right? Well, it's going from 876 to 1457. So you were right there, exactly what you were saying.
That's a big jump.
I mean, that
jump,
is absolutely a big jump.
But you're talking about $600 a year
versus down here where you're talking $6,000 a year.
Yeah, yeah, exactly. So,
but they're going through that same kind of rate increase and tightening of guidelines, and people are carriers are non-renewing their books, and it's crazy all over.
And it's funny how some of these states have really bad pockets where the insurance jumped up really high, and right next to them, counties right next to them, hardly any. Like I'm looking at Montana right now in Phillips County. They went up 53% over the 3 years, but they went from $1,500 a year to $2,300 a year in Montana, right? But you can go to like Colorado, Box Elder in Utah, and you're only paying $1,400 a year, right? And I feel like the Utah have more like wildfires, things like that, than Montana, right? I don't know. Maybe I'm wrong.
Yeah, I don't know.
So, but anyway, I just thought it was really interesting. So, when Florida complains about the high hikes that are happening in homeowners insurance, maybe it'll make you feel a little better. It's like it's not just us.
Misery likes company.
Misery likes company. And some of them are getting higher increases than we are. The only thing is that we start at a higher premium rate anyway. So
but those are over 3 years, because we're we're not continually seeing that increase. We talked earlier about, we're starting to see like numbers come down. Yeah, the flattening I feel like has happened. I feel like we've already been in that flattening mode.
I think if they had 24 in there for Florida, it might not be as bad. Like if they had the 4 years, because really, Russ, don't you think that this year is the year where we started seeing some effects from that 2022 regulation?
Yeah. Rates are staying fairly.
Yeah. And last year, not as much, right? Because it just started. It was only like a year old by then.
Rates were still going up because they were still dealing with the backlog. And
so this will probably look a little better for Florida. Like next year, if they do the same thing, it'll look a little better than it is now.
Well, what's the margin for the depop for Citizens?
20%.
It's 20%. So, there was such a time there, 3 years, where the depop just wasn't an option for so many. And now the depop has really been, we see the numbers. You see, it makes headlines.
Yeah.
Biggest Florida insurer moving. It's like, well, that's a good thing.
Yeah.
That means
and a lot of the times the renewal, the company you're being depop to is cheaper than what the Citizens premium was.
Right.
Kind of going back to the way it was years ago. Citizens was the last resort, but it was usually a lot more expensive, going back sometime.
Going back 5 years ago.
And we've watched Citizens become big and smaller and big several cycles in this radio show, right? So we've seen it where Citizens wasn't the only one that you were going to get. You had a lot of other choices. And then we saw the Citizens get bigger and bigger. And then we saw them depopulate. I know we went through at least one depopulation cycle, strong one, since we've been on the show. And we're in another one now.
You remember the popular sentiment when maybe it was a kind of uneducated sentiment, but when people would be like, "Oh, I have Citizens," people would kind of be like, "Oh, sorry," like it was you pat them on the back, like it's okay, kind of thing. It was a bad thing. Yeah. And now it's like most of us. Yeah.
And one of our shorts on our YouTube channel is talking just about that. Like, is Citizens really a bad insurance company to have? And Ross was explaining in very clear detail in those videos that Citizens is just like any other insurance company. And there was
they're all great.
Well,
they're all A-rated until the day they're not.
So they're not.
Well, the other thing I thought was interesting that Ross makes a point about with Citizens that I always forget about, it's a not-for-profit company. So their job is not to make a profit. It's just to keep people insured so that they can have mortgages for their houses. That's what Citizens is there for.
Yeah.
So they're not trying to make money, specifically making profit like all the other companies. So Citizens is really not necessarily a bad company to have.
And Ross, you could even, like, you're quoting all the time. There was probably a point in time over the last 3 years or whatever where Citizens is it. And I'm sure that's still the case sometimes for a certain age of home or whatever. But you're probably quoting more non-Citizens policies now than you have.
Yeah. Sending out a lot of non-Citizens quotes.
Yeah. So that goes to Johnny's point.
Yeah. Now, here's the thing too. We just saw somebody who right now they got a 25-year-old roof, right? Citizens is the only one that's going to offer coverage for them. We'll call it's $5,000. If they put on a new roof, then they've got some other companies that are going to offer coverage, a little bit, better policy because you can expand it a little bit. Same premium, $5,000.
But you have to have the new roof.
But you have to have the new roof.
Mm-hmm.
So it's like, what do you do?
Yeah, exactly.
Somehow you need a free roof.
Well, you are going to. You should move to my neighborhood.
Right? Hey,
that's
Johnny got a guy.
That's right.
I know a couple guys. But so that's an interesting spot in your head because with every year that passes, you're that much closer to needing that roof. And I got news for you. That roof probably gets more expensive with every passing year too.
That's an interesting one.
Yeah. Are you going to put a new roof on not to save any money?
But you are saving money in a way.
But you're saving your inflation.
Yes. So you got to frame it just right.
Somebody you should be looking at. So this is kind of gets into the tariffs conversation, but what materials go into, say you're getting a shingle roof, like plywood, shingle material. Like, are these things that are going to be taxed higher for the people who manufacture them? And you might want to think about that. Now, if this is something that's like maybe timber or wood is going to be exempt from some of these tariff conversations, or maybe some of the stuff is manufactured in America, then you could expect prices maybe to go down,
or at least just kind of
materials.
raise at a, I guess, somewhat expected level.
And this is also part of why insurance has increased too, because like you're talking about replacement costs, like what's it cost to build stuff, and so all this materials and labor are increasing, and so your premiums go up. I'll be curious. AJ asked this on the comments there, but what impact have the storms had on insurance premiums? I don't know if that's all shaken out, but that's actually going to be the really good test of, did the legislation at the state level do what it was supposed to do? Because now we've got storms, now we've got claims based on legitimate storms, and everyone's like, oh, now premiums are going to go through the roof. And my contention is like, no, I don't think so, actually, because they've actually these are what they're counting the beans for, right?
That's what Ross's perspective is too.
And AJ mentioned flooding too, and it's a good time to point out that your homeowner insurance really isn't your flood insurance. Like, that's a completely separate,
totally different,
also
separate beast.
Flood insurance, if traditionally you've had to pay it in full for the year,
yes,
it's always been a full pay. If it's $1,200, you got to stroke the check for $1,200. There's never a payment plan. Flood insurance just announced that they're going to have a payment plan, a monthly payment option.
Interesting.
So flood insurance has been cost prohibitive because you can't dole out that big chunk of change, but you're still concerned about it. Now there's a monthly payment option. So if flood insurance is something you wanted to do but couldn't afford it, or couldn't afford that big down payment, now's the time to get it.
Wouldn't it be? I'm sorry. Go ahead, Jimmy.
Just can you escrow that yet?
I was going to say, wouldn't it be prudent to just roll it into an escrow?
So if it's not required, typically, if flood insurance is required by your mortgage company because you're in a high risk flood zone, that's going to be escrow. You're going to already have that mortgage company's going to pay it in full. This is for non-escrowed people who are not required to have it, or non-escrowed. So
call them NEPs. Non-escrowed people.
That's right. So it's for the NEPs. So for all the NEPs out there, then we've got a monthly payment option instead of having. And even if you said, okay, if you worked it out with your mortgage company, like, hey, I'm going to get flood insurance, I want to escrow it. That first payment has to come from, even if you pay monthly with your escrow, that first payment has to come from somewhere.
Right? Yeah. Remember, your escrow, what you're paying every month for your escrow is not an installment on your policy. It goes into a savings account so that when the policy renews, you've got the full premium in a savings account
for next year.
So, yeah.
They always get that upfront cost.
You always pay, like insurance lending, we require a full year policy paid in advance.
But in subsequent years, they look at it from the mortgage payment each month on a monthly part, right? So you're even though it's paid through the escrow in the beginning of the year, you repay into your escrow by month.
But that's you can
calculate it that way.
Yeah. So an escrow account is basically just call it a savings account, right? It's like, Jimothy, hey, you're going to have a $1,200 bill due next November. I'm going to force you to save $100 a month, right? Into an account so that come next November, I got $1,200 ready to pay the anticipated bill. And then the reason your escrows adjust every year is because we really don't know that it's going to be a $1,200 bill next year. Maybe it comes out and it's $2,400. And then all of a sudden you've only saved up $1,200. So we got to adjust things, right? Your payment's going to go up. We got a shortfall. So, and that a lot of people, I get calls a lot this time of year because maybe the taxes came out, there were shortfalls, or, hey, your insurance doubled. Why is my payment going up, $600 a month to come up,
So and then they get to do that math game. Do I want to part with this much money right now, or
spread
pay
it
that
out
much more moving forward?
Yeah.
The answer is usually, if you got it, pay it.
If you can, but a lot of people just don't have that. They just don't have it. They haven't budgeted for it, haven't set it aside, and so it's a tough pill to swallow for some.
So I wanted to ask Ross about, let's say that a homeowner needs to get a new roof, right? And the roofer comes and they say, well, for upgrades for your roof, you can do secondary water barrier or which is going to cost you extra money. I just saw a quote where the roofer had a silver plan, gold plan, platinum plan for the secondary water barrier.
It's
And
like
one
the
of
car
them had
wash.
like 2 layers and one had 4 layers of adhesive over it or something. I don't know.
In order to qualify, you just need 2.
Yeah, exactly.
It's called secondary.
Right. And that's what I was saying. So people are coming up with all this extra stuff, and charging extra premiums for it. And I was wondering, is it worth paying the premium based on insurance savings? So if you had a secondary water barrier, and let's just say the water barrier costs you an extra, I don't even know, let's just say $1,000,
Yeah, I was gonna
like
say
$1,000, right? How much discount do you get when you put in the report, hey, I got the new roof and I got the secondary water barrier thing? Does it save you much money?
There's some carriers where it doesn't make any difference.
Okay, you wouldn't get any credit at all.
Yeah, there's no difference.
Okay.
And then if you do get a discount, it's not very big. Sometimes it's $100
a year.
Yeah, a year. Yeah, or
Okay.
$200. Now, with that being said, if you're in if you want to, go to the My Safe Florida Home program and see what you qualify for as far as upgrades and getting the grant to do that. Right now, most people don't have the secondary water barrier on their existing roof, or if they even did do it back then, maybe they don't have the permit or the proof, and sometimes it's hard to tell whether that's there or not.
Mm-hmm.
So when they come out and do their My Safe Florida home inspection, or My Safe Homes, whatever it is, they'll tell you the list of discounts that you're not qualifying for on your existing roof, and one of those is typically secondary water barrier or water resistance.
Mm-hmm.
So for that just little $100 of savings, that qualifies you for a new roof through the program.
Right. And
one of my interesting.
So that worked. That happened with my dad. He came out for the he wanted to put some shutters over a window or something like that. And they came out and it was secondary water barrier, and he was thinking about getting a new roof, and so it all qualified for it.
Yes, and I had a customer that called up. They got qualified for the My Safe Florida Homes. It's called My Safe Florida Homes, and they're getting a $10,000 credit on the roof that they're going to be putting on, which is going to save them almost like 20%, 25% of what the cost of the roof is. But let's say that the house is older and it doesn't have the current hurricane strapping. And let's say that the roofer's saying, hey, we'd like to restrap, as an extra cost, we'll restrap your house as part of this new roof. And what we're talking about restrapping is connecting basically the roof structure members to the wall. How much savings do you get on that? Because we've seen people get decent savings doing it after the fact with third nail.
Yeah, I mean the savings hasn't been, so it depends on what you're doing. Is it a single wrap that is existing there and it does wrap over the truss, but it doesn't have enough nails, or it only has 3 nails on the front and it doesn't have a nail on the back? And if you're going to go in there and put the extra nail in on the back, probably not going to be a lot. But if you're going to go from where there's no strap at all to, adding some sort of metal connector, I don't see it being more than $1,000 typically. A lot of the times it's 600, 700, something like that. But it's still a discount. Now, if you're getting the new roof while they're up there, if it's not a significant increase or in the cost of the roof, then do it. But if you were to do it after the fact, then it's probably, $1,500 to $2,000 to have that work done after.
Right, but if you're saving $600 to $1,000 a year, roughly, 2 years, 3 years tops, you made your money back.
That's correct, but there's a lot of people that don't want to spend the extra $1,500 right now to save $600.
Right.
I got a question, Ross. When it comes to like strapping or modifying an old roof, do they take into account like those structural screws now that are just as good as strapping, or they say that they are? Have you heard anything about that?
No, on the wind mitigation report, all it is metal connectors.
Okay.
And how if you want to call it a clip or a strap.
One of my customers recently just bought a house that had a new roof put on it over the last, let's say, 2 years. It wasn't brand new. It was a composite shingle roof. No No roof cap, no ridge
thing.
cap at the top, and
Okay.
no turbines anywhere.
Mm-hmm.
And it got approved by the building department. And I'm like, when I used to put on roofs, when I used to flip homes, it says in the product material that
You
if
have to vent the roof.
Yeah, because it'll reduce the life of the shingles if
Yeah.
you don't, and they won't get the same amount of useful life for it. Have you ever heard of that where they didn't put anything in there?
I mean, I had know nothing about construction.
Oh, okay.
You know,
Because
I can read a wind mitigation report and tell you about it and what needs to be done, or a 4-point inspection, but I can barely tie my shoes.
Yeah, I
I wear flip flops, or
yeah,
already
that's why you wear your
Slip-ons,
flip
right?
flops,
Yeah.
right? So so I actually told the owners, like, I would go back to the building department and say, hey, did this meet code? Because it doesn't make sense to me that there's nothing up there.
Maybe
And
they
then
had some kind of
it
venting.
doesn't
You can
have
have
an attic.
soffits.
It doesn't have an electronic attic fan, or
Yeah,
anything like that.
I don't have one.
I don't
On
know
my
what
new
that is.
construction home, there's no venting.
Oh, I think
There's-
it was you,
there-
Jimmy,
there
that
was
we were
n-
talking
there's no
about. It
roof
was
vent.
Jimmy's house. I forgot. It was Jimmy's house.
There's soffits underneath on the
Right.
ends, right? But there's nothing on top. So
I would call it the city. That's bugging me. I would.
There's
got to
be some way that air is circulating. It can't just be the soffits. You don't have like vent caps, like those curved over things.
No, they'll tell you. The builder told me that they don't put them in. That's not something that they. And I would.
They're like, why would
I
we
hate
put
the
an
word
extra hole
assume,
in
but
your
of course you would have to assume that that's legal. That's
And they
okay.
know what
That's
they're
the way it
doing.
is. You know. But
Interesting.
So getting back to the upgrades on the roof, I think it sounds like the bottom line is that there is a benefit for doing those two things, and the fact that you have a secondary water barrier, right? If you need it, right? So when you have a storm, your house is better protected, and the strapping, if you don't have it to today's code, if you do it, it isn't going to be a bad thing, but it isn't going to necessarily transform your life on your insurance policy.
No. It used to.
Mm-hmm.
It definitely used to. But we're not seeing that significant.
So we're not
of a-
seeing. Remember, we used to have guys
cut it in
that.
half. It would cut in
Right.
half.
Yeah, right.
I kind of like what Ross said about the secondary water resistance as it relates to the MySafe Florida. So essentially, you have to qualify. There has to be some upgrade that can be done that's going to make you more resistant to storms than the current roof. And it's not just, hey, it's a new roof. It's got to be something like an upgrade, right? Like, oh, you went from no strapping or toenails to strapping, or you went from no water resistant secondary to
It could be the plywood that's underneath the shingles.
Mm-hmm.
Could be that.
wasn't thick enough.
Wasn't thick enough. It wasn't. It
Not
didn't
enough
have
nails.
enough nails.
Okay.
In the spacing of it.
But you could have all of that good, but if you don't have that secondary water resistance, that could be your qualifying.
That's right.
And that program, just to reiterate, gives you $2 for every dollar you spend.
Up to 10,000.
Up to 10,000. So you could spend $5, that's a $15,000 budget.
Beautiful.
So that's pretty good. And that probably not enough for a new shingle roof, but probably pretty close, right?
The 15.
Pretty close,
It'd have to be a small house.
Yeah.
15,000. You're probably looking at 1,000 square foot to 1,200 square foot house.
Or you
Somebody
get the right
just-
roofers.
Somebody just.
I'm sorry?
The right roofers might be,
yeah.
you shop it around a little bit.
2,000 square foot roof. This is on our little comments thing.
Mhm.
2,000 square foot roof this is 3 years ago, was 19 to 20. Just installed last week for 15.4.
Boom.
Oh, so we're having
Nice.
deflation on the roof a little bit?
That's what it looks like.
That's what it looks like there. Thank you, PF, for doing that. He's another big fan that comes out here too. And Don, thank you for giving me comments about the alligator stuff. We're probably going to get to that next week, though. I'm sorry about that.
Oh,
We'll do
that's
the
a
alligator.
disappointment right
Well,
there.
it's either that or we're going to miss out on the interest rates, and I really feel like we really needed to talk about
It
that
is.
today.
It's Florida Talk Real Estate, not
And
Florida
somebody-
Talk
alligator.
Gators.
And the other thing
Gators are
is-
later on Real Radio.
Yeah, but and the
12:30,
other thing
right?
is
Yeah.
somebody actually complained to us last week that we didn't talk about interest rates on the
That's why you gotta be careful.
We
lobbing
should
out
probably
those
talk about
teasers.
real estate.
yeah.
The
So
PF also said, Jimothy, if you got spray foam insulation under your plywood, there's no reason to vent.
Okay.
So if you look up there, did they
Oh.
spray foam it?
I don't know. I'd have to,
that's
It'd be-
have
interesting.
to pop up there and find
You
out.
probably have when you wouldn't have done a wind mitigation on new construction. Probably. I was gonna
No.
say you could look at that inspection, but
Yeah.
that doesn't make sense to me logically. Like why does spray foam stop it from needing airflow. I don't know. I'm sure there's an answer for that. But okay. So what are we talking about? Interest rates?
So we're gonna talk a little bit about interest rates and where it's supposed to be heading next year. Because the reason why I want to bring up that particular subject that way, how many people have you heard over the last 6 months is saying
they're waiting?
They're waiting, right? They're waiting for the election, or they're waiting for the interest rates to go down, or they're waiting for this, or they're waiting for that, and they're waiting.
So they're not even giving you a specific goal that we often
This
say
is too damn high.
should have.
Rates are too damn high.
But it's not like I need it right here to afford it. It's not. They don't have a goal. It's just I'm just arbitrarily waiting.
I'm just not feeling it. I'm just not feeling it. They're not saying that, but that's what's really happening in real life.
Mm-hmm.
And those are the people that really can't take advantage of the market changes. And it's, when you think about it, real estate can be when you need the real estate. I'm talking about when you need to buy or you need to sell. If you follow the market enough, there are swings in the real estate market, just like in the stock market, that you can use to swing in your favor if you time things right and you're planned correctly so that you can do it. And
but most of the time, you just get lucky if you get lucky, or you get unlucky if you're unlucky, right?
Well, there's a certain truth to that, but I also think that if you plan in enough advance so that you're saying, oh, I want to sell in a year, but things change 8 months from now and you really understand what's going on, and that you go, you know what, I'm gonna move up my schedule because now is the time to do what I need to do because X, Y, and Z. But if you don't have that plan, you miss out on it. And I see people do it all the time. They put their houses on the market after the strong market, right? They go into buying when the interest rates get to the highest point. You've been talking to them for 3 years and the interest rates have swung 2 points, right? 2 percentage points up or down. And they're not reacting to that. And then by the time they're ready to do something, the market isn't helping them out at all, right? And you can get help from the market by using government programs, having the right people, and not just looking at the numbers. Oh, the interest rates are high. Yeah, with the interest rates high, there's less buyers. So when you go out there, you can get better deals on the houses that you're making an offer on, because there are motivated sellers out there that need to sell right now. And those are the ones that you're going to find and get a really good deal on, so that the interest rates aren't going to be such a big thing because you're getting a lower price, or they're giving you concessions to help buy down the interest rate. One of the things I'm telling my sellers right now, hey, keep in mind, if you can, if we get the right number for your house, would you be willing to give a discount to the buyers to reduce their monthly mortgage payment by a point, right? And I'm always going to have to go to Mike to ask that advice. But that point savings, Mike, in today's market, going from 7.25 in real life to 6.25 is a big deal for a lot of people, right?
Sure.
On the mortgage payment.
Yeah.
And if you're in a $500,000 house and you're dropping a point, you could be saving $250 to $300 a month for the life of the mortgage, just by having the seller buy down your mortgage payment by 1 point, or mortgage interest rate by 1 point. But if you're in a strong market, you're not going to be able to do that. If you're in a strong seller's market, the sellers aren't going to afford you those opportunities. So having the right professional with you to create a plan, a team of people creating a plan, so that you can move forward, is a really good thing. And there's just too many people that really don't. This market's very confusing. It's even confusing to me.
I think we're kind of in it. Like, I'm a mortgage professional, and so if I tell you, like, interest rate is not, it shouldn't be the most important factor in deciding what you're doing, right? But it's hard to say that because, like, I make a living doing mortgages, right? So of course I'm going to come up with some sort of narrative that tells you that's not a bad time in the market, like it. But part of what we do on the show is really give people good, professional, honest advice, and we advise you as if we were talking to our own family. Like, that's kind of like how I approach these things. And for your everyday, like, homeowner, we're not talking about investors who are trying, like, we're not talking about, like, you mentioned the stock market. Like, I'm not an investor trying to time the market and make money in an up, down, sideways type market, right? I'm just an average citizen, or not citizen, just trying to find what's my next. I'm either renting now and I need to buy, or I need to sell and buy. I'm like ready for a change in my housing situation. I can't make a solid case. Like even if I was trying to, I can't make a solid case like why you would wait based on interest rates, because there's other factors that are gonna you may gain on the interest rate, but you're gonna lose out somewhere else. If you're a renter, I could never ever make the case like, yeah, go ahead, keep renting. Like you shouldn't buy now, just keep renting because I know this market's going to be better for you in a year, right? Or if you're a seller and buyer, yeah, if it's a good time to sell, that means it's not a great time to buy.
Right. You can't get both.
You can't get both sides, right? Or it's not a good time to sell, but it's a really good time to buy. Well, okay, you're losing one and you're gaining on the other. So my only advice, it's the same advice, Johnny, is you got to know what works for you from a budget perspective. Is your income stable? Is your debt stable? Is like your household stable? You got to know what your budget is. And then it makes sense for you. Like, hey, we are ready to be homeowners at some point. If the right home presents itself and the numbers work, then yes, it makes sense. So I couldn't, even if I wanted to, I couldn't make a case that it's not a good time to buy because of interest rates. I just can't make that case. There's no logical case to be made there.
So the number that matters most is your monthly obligation. What it boils
can
down
you
to
afford
after
your monthly mortgage payment, just like can you afford your rent?
It sounds so like salesman, because you go back to like the car salesman. It's like, what payment is it going to take to to get you into a car today? And that's not what it is, right? This is a legitimate, logical conclusion, which is interest rate. Yes, you want the lowest rate possible. Yeah, there might be some ways of extracting money as part of your deal where you can get a lower interest rate. But at the end of the day, the interest rate isn't the deciding factor.
So for the rates themselves, okay, so when we started with the Fed cut rate back in September, we were at, with Freddie Mac, we were at 6.09, right? Now we're at 6.78 this week. Now last week was flat. We only went up 0.01, right? So we were at 677 or something last week or something like that. So we're only
like inflation is now, down versus right.
Yeah.
What's our baseline?
Yeah. So you save a half a penny on your mortgage. So but we're at 678 now. Now the last time we were at 678 or around that number was November of last year. And November of last year, we got as high as 779 in November of last year.
Did we really?
Yes, 779 was the Freddie Mac rate. That's the highest rate in a very long time.
I don't remember that at all. We were pushing on 8's door.
7.79. There was a sharp increase, basically like mid-September to November, late November.
Oh,
yep.
Or early November. Sorry, it's right at the end of October.
And it took a while for it to go back down. It took us to like March to get it down from that. It took a long time to get out of that hole, like 6 months.
Well, no, by December we were at 6.67.
Oh, were we?
Yeah.
Okay. I have the chart spread out so much.
So went down in like the span of 2 months, went down
half
3/4 of a point. 3/4.
Oh, 3.779. Oh, yeah, 2.67. Yeah.
Yep.
Okay, so the last time we were at around these numbers was December of last year, but the last time after that, right, going backwards, was 2006, right? So we're in 2006 interest rates, basically, is where we are right now. And then
nice if we get a little repeat, though, huh? Get a 3/4 point drop here in December.
Jeez, I'm looking at this trend. Maybe let me go back on what I was just saying, right? Like if you're timing it, so look at November. So October into November of 2022 was the peak. Then it came down a little bit.
It did
in December.
It did it.
Yeah. And then November, right? 2023 peak came down a little bit.
Huh.
Now we're on a little November peak.
Yeah.
Is it going to come down?
I wonder.
Let's go back further. Hold on.
So there's no correlation except for, I guess, coincidence.
Well, it could be like your little spending, people were inflation
spending
going
pop,
up.
Yeah.
Then we get 2018, little peak in November.
Did it happen?
Yeah.
Huh.
yeah, it's true, but the
little
peak in
peak
November
in
was
2019.
4.83.
That's a trend for sure.
Yeah, there's a trend that it looks like it
2021 was a little crazy. We had
Yeah.
a peak in March of 2021.
But 2006, 2002 was, so we hit it last year. We didn't hit these numbers since 2006, 2007. And then you had to go back to 2002 to see the numbers again. And then you have to go all the way back to like 2000. Well, in 2000, we were at we were in the 8s in 2000, like 2000 flat. So we're at the higher points now. Of the interest rate chart, if you look at the whole chart, going back to 2000 forward, so the last 25 years, we're at high points of interest rate, other than that peak of 779 of last November, right? A year ago, November. Now, what are the National Association of Realtors expecting interest rates to do next year? They think that we're going to be at 6%. That's where they think we're going to be. It's like right at 6%. And so we'd be going down about 3/4 of a point where we are now. But we'll be, if we go down to roughly 6%, we're going to be where we were in September of this year.
You know what we should do?
Did we start the show saying that the consensus was we were going to be at 5% at this time?
Last year, the economists were thinking 5%.
At this time this year?
Yeah, and I was thinking 5.5, 5.75 best.
They're thinking 6 for next year.
So it might be 7.
Yeah.
Jim, it wasn't like a few weeks back. There was an article you were reading that was talking about what
The
people
three
were
different
predicting.
groups, right?
Yeah.
The 3 different groups.
So I want to know. I would love to get that exact same people, whoever they were talking to.
Yeah.
No, from a few weeks ago,
Right.
where they said, "Here's what's going to happen in 2025." And now, we've had, since that article was put together, we've had the Fed do something. We've had the election.
Mm-hmm.
Like, are they saying the same thing now that they were saying 5 weeks ago or 6 weeks ago or whatever?
The National Association of Realtors was one of the 3 groups of people that they interviewed when I talked about the article a couple weeks ago.
Yeah.
So it was NAR, National Association of Realtors, quote, economists, and quote, bankers. Those were the 3 groups. So NAR came out with their report this week saying that they think we're going to be right at 6%, pretty much through the whole year. We're going to be.
And how did that compare with what they said, 5 weeks ago or whatever it was?
They were thinking that we were going to be between 5.5 and 6.
Okay, so they've adjusted
a little
slightly,
bit up where
slightly.
they think it's going to be in 6. So what I'm trying to explain to people is whether we're at 6 or 6.78, right, which is where we are in Freddie Mac now, in the scheme of things for buying a house, if it isn't an investment property, it's a place you need to live, to raise your family, or just to live so you're avoiding rent. I know that 3/4 of a point is a difference in your purchasing power and your monthly costs, but it isn't that big of a difference between where we are now and where they think we're going to be all next year. So waiting for anything to get better, there's nobody seeing anything on the horizon that's going to make all this stuff like super rosy green.
Yeah.
Rosy for
You would
rosy
have
green.
for buyers, you would have to be predicting rate decline and the housing price decline
Yeah,
at the same time. And
I think housing price decline is coming, and
Okay.
I think it's already here.
well, and rates are going to come down then, apparently. So okay.
That's true, but I think
Well, then I guess they should wait.
well,
There you go. Let's see what happens.
but if that does happen, what's going to happen is you'll have more buyers in the market, more competition.
Absolutely.
Your sellers aren't going to be giving you the discount.
And then all of a sudden, poof, there goes your advantage.
There
and
goes
let
your
me-
decline.
And let me tell you something. If we ever get into a seller's market again, it's really going to disrupt the buyer side of the market more than the seller side. And what do I mean by that? The sellers are going to
Commissions.
say, right, the seller's going to say, why do I have to pay your real estate agent anything as the buyer's agent, right? The seller's going to say, I got 20 offers on the table. Somebody in this group is going to give me the number I want and not have to pay your real estate commission, Mr. Buyer's agent or Mrs. Buyer's agent. I'm just going to do it with somebody that doesn't want to do that, or they're going to pay, the buyer will pay the agent out of their own pocket. When we get to that, it's going to be very disruptive. And if you're a buyer that doesn't have the wherewithal financially to pay a real estate commission on top of buying the house, you're going to be squeezed really hard when that market comes. It's much better to be in this market if you can't afford the real estate commission right on your own. Much better to be in this market and then get the seller to pay that commission for you, because they will do that in today's market.
And ask them for a credit.
Yes, and a credit
buy
on
down
top
that
of it.
interest rate by 3/4 of a point.
Yep,
or
and
something
give
like that. Yeah.
the buyer's agent the real estate commission they're asking. So if you're thinking of time in the market, this is a really upward upward, downward, kind of upsy downsy kind of market right now, where you really can't predict what's going to happen in the future. So it could get better, but it also could get worse. And I'm already seeing price declines. Now, my coach was telling me that the way I'm looking at this is incorrect. So in January, Palm Beach County, and this is pretty much for all of South Florida, Palm Beach County, like 1 minute. Palm Beach County was at 615 when we started the year. Then we went up to a high in June of 660 for the median price for single family homes in Palm Beach County, right? 660. Then last month's report, we were down to 615 again. To me, that's a 6.8% decrease in median home price values from June until today, right? And my coach is like, yeah, but you're not counting for the season. And so that 6.8, we usually see a dip a little bit during this time of the year. So you can't really say that we're down 7%. I'm telling you, we're down 7%. And the reason why I'm saying that, I don't see anything on the horizon that's going to make the prices start to go up, right? We don't have enough buyers. We have too much inventory. The costs are too much to buy a house, or not too much, but very high to buy a house. I just don't see anything that's going to not make the prices go down. I just don't see it. We've had a 10-year run or a 5-year run that's been excellent. And even if we drop 30%, the national economists are saying that's where we should have been if you took 30% off of our prices right now.
Yeah, just think as a buyer, not the seller side, but as a buyer, Johnny's a really good example where he's got everything lined up. He's just waiting for the stars. Like he's got everything so that when the house, and Johnny could even like find the perfect house and it's for sale, whatever. He could say, you know what? I think it's next month. It's going to be still on the market and I can get a better. That's perfect. I love that. Cause you can just kind of sit back and wait and realize if you lose it, it's not the end of the world.
But like you said,
he's working the market.
You lose on one side and gain on the other, right? So if I'm trying to find that sweet spot, I'm glad I don't have that perspective of sweet spot. It's my sweet spot is finding what we need at my price point. That's my sweet spot, right?
So. Yeah, that totally makes sense.
But you're right. It is.
That's just how you have to do it. The prudent thing to do.
It's good to be positioned, even if you're, maybe. Well, get positioned because that maybe can quickly become I need to do this. And if you're not positioned, there's nothing worse than finding out at the last second, like, I can't do this because I didn't prepare for it in time. So, at least get those hurdles out of the way. And it's easy to do. You just go to FloridaTalkRealEstate.com. You're not going to dig a bunch of money out of your pocket to find out your positioning for you and your family.
Cost you nothing.
It will cost you nothing but some time and some responses to some emails, maybe.
A little bit of intrusion into your personal life.
That's it. But if you want to know, you can know. And man, knowing is everything. Get positioned. If you need a team, whether you're buying a home, selling a home, stuck with a home, you don't know what to do, if you're going to get into this world, if you have anything that touches real estate, please remember FloridaTalkRealEstate.com. FloridaTalkRealEstate.com. Know it, use it, love it, share it. Ross Komarinetz, have a great weekend.